When Bitcoin plus pass $100,000 to $200,000, maybe it'll trade from 250,000 down to 175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space. I think it's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry. MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage.
In a recent interview at Bloomberg Television, MicroStrategy Executive Chair Michael Saylor discussed the transformation of the crypto industry into a more stable and scalable marketplace of digital assets based on Bitcoin, public companies, and institutional money managers. This week, Bitcoin price came within a hair of the $36,000 mark before abruptly reversing course and correcting to $34,800. After a near 30% run over the past month, it is natural for the price to cool off. Despite the intraday price action, which saw a 4.67% drawdown, a number of analysts remain bullish on Bitcoin. Permabulls like MicroStrategy CEO Michael Saylor appear unbothered by the whipsaw price action, and on November 1, MicroStrategy announced the October purchase of 155 Bitcoins for $5.3 million. Additionally, Fidelity Investments Director of Global Macro Jurrien, in a post on the X said, "The good news for Bitcoin is that its annualized volatility is down from its 2018 peak, weekly returns below, although at 58% it is still head and shoulders above traditional asset classes." Saylor stated that when Bitcoin reaches the range of $100,000 to $200,000, there's a possibility that it might undergo a fluctuation, potentially trading between $250,000 and $175,000. On a different note, Sam Bankman-Fried, the one-time cryptocurrency golden boy accused by U.S. prosecutors of stealing billions of dollars of his customers' money, was found guilty on Thursday on all counts and faces up to 110 years behind bars. When discussing Sam Bankman-Fried, Saylor mentioned that the crypto industry has faced a range of challenges, including the presence of inexperienced entrepreneurs like Sam, as well as unreliable custodians like FTX and the involvement of incompetent creditors, resulting in several bankruptcies over the past year or two. Now let's shift our focus to a video. Before we get started, make sure to subscribe to the channel and click the bell icon for the latest updates.
The crypto industry has been plagued by inexperienced entrepreneurs like Sam, unreliable custodians like FTX, incompetent creditors, a dozen went bankrupt in the last year or two, unscrupulous promoters, and their failure is a necessary rite of passage for an industry that's going to lead to a new, more stable, more scalable ecosystem that'll be based on Bitcoin. Public companies like Block, MicroStrategy, Marathon, a dozen Bitcoin miners that are public, institutional money managers like Fidelity and BlackRock, and regulated banks when they eventually become custodians. The offshore crypto exchanges, the stable coins, the crypto tokens, the DeFi projects, they're going to shrink, fade into the background, and decouple from mainstream and institutional digital assets marketplace that'll be based on Bitcoin. When Bitcoin plus pass $100,000 to $200,000, maybe it'll trade from 250,000 down to 175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space, with a lot of volatility. I think an analyst, Timmer from Fidelity, pointed out it is got the highest volatility of any asset, but it's also got the greatest return. And so, as I've said in the past, volatility is vitality. I'd rather have the volatility and the performance than get rid of the volatility. Gold's not volatile, but it's also down 1% in 3.25 years. So that's not what we're looking for. We have raised more than $1 billion in the past via ATM offerings, and whenever we did it, it was accretive to our shareholders. This $600 million vehicle will allow us to engage in more capital markets activity. As we're selling stock at a premium and then buying the underlying Bitcoin, we're capturing a tax-deferred Bitcoin premium for our common stock shareholders. So we're very thoughtful about when we do that and how we do that. And sometimes we'll do it, sometimes we won't. It depends on market conditions and, and where everything trades.
With the surge in spot Bitcoin ETF applications, Wall Street is poised to engage directly with Bitcoin. While traditional financial institutions are likely to promote it as a risk-off safe haven investment, ETFs offer a different type of Bitcoin investment than what's available on a traditional crypto exchange. MicroStrategy offers a unique proposition by not charging fees and using intelligent leverage to create a tax-deferred Bitcoin premium for investors. Saylor sees this as a compelling alternative to a spot Bitcoin ETF. He said that combined with demand caused by ETFs, the halving is why he and many others are fairly bullish over the next 12 months. Now let's shift our focus to a video.
I think it's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry. MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage. We borrowed $2.2 billion at 1.6% interest to buy Bitcoin. And we can generate a tax-deferred Bitcoin premium either by using cash purchases or by capital markets activity. So we're not for everybody, and in sovereign wealth funds that want to buy $50 billion worth of Bitcoin can't fit into the MicroStrategy capital structure. But if you want leverage and this tax-deferred yield and no fee, then we're an interesting alternative for people in the space. I think it's going to help everybody in the space. They're going to accelerate education efforts and adoption. Already you can see Fidelity analysts are making a huge impact on the digital asset space. So as you see Wall Street analysts from all these ETF firms and you see their education and marketing efforts come into the space, and as they provide the rails for traditional institutional investors and endowments and the like to engage, they're going to expand the entire ecosystem. But they're not an operating company. They can't take on leverage. They can't not charge a fee. I mean, we literally don't charge a fee. And they can't engage in cash purchases with operating income like we can in order to generate that tax-deferred Bitcoin premium. During this crypto meltdown, the crypto bros offshore and the leveraged hedge funds, they exited the space. They were all bankrupted for the most part. Right now, the natural buyers in the space are Bitcoin hodlers, the maximalists, the people that are sweeping their incremental cash flows into Bitcoin. It's almost impossible, very difficult for mainstream investors and mainstream retail to buy Bitcoin because there are just very few on-ramps. So the natural sellers are the miners, the natural buyers are the hodlers. The trading volume has diminished quite a bit. This is the lull before the storm. Once we get these ETFs in place, that will open up the gateway for mainstream retail and mainstream institutional capital to flow. And the halving in April is going to cut the available supply in half, and it's going to eliminate half of the natural selling. So this next 4-month period is very pivotal to the asset class.
Jurrien Timmer offers a perspective that sees Bitcoin as an exponential gold, highlighting its potential to outpace the value increase of gold under specific economic scenarios. Michael Saylor believes the impending approval of ETF and upcoming Bitcoin halving in 2024 will drive unprecedented euphoria to the Bitcoin market. That concludes our conversation for today. What is your stance? How will the upcoming Bitcoin halving and ETF impact its price and supply? Feel free to share your thoughts in the comment section below. If you found this content informative, please consider giving it a thumbs up and subscribing for the latest updates. Thank you for being here with us.